Gone of the days of trying to find new tenants, having void periods. That just does not exist. Investors and developers, stick around, because this strategy is not only going to help you save a lot of time, but also it's going to help you increase your profits. And I have a live example to show you at the end too. As I start to chat through supported living today, you will understand why I have shifted my entire focus and homing in on supported living strategy completely. For me, I am a business owner. I run 2 businesses, so my personal investment strategy needs to be as hands-off as possible. I have been involved in supported living for the last 2 years. I have helped a lot of my investors at KO Estates actually invest into these types of properties, but I'm also an investor in it myself. I am the biggest fan of the strategy, but let's dive in and you'll learn exactly why. First things first, what even is supported living? Let's start with the definition. Supported living is a service model that helps people with various needs live more independently. This could include individuals with physical disabilities, mental health conditions, or the elderly. The goal is to provide them with a home environment where they can lead a fulfilling life with the necessary support. This is an unbelievably rewarding strategy. Some of the types of people that you will tend to see in these properties: learning disabilities, autism, physical disabilities. Typically, these types of people will need support for the rest of their lives. We're not necessarily looking here at the temporary support to get people back on their feet and reintegrated with society. The specialised supported living really looks at the long-term tenants who, unfortunately, these people are probably going to need support for the rest of their lives. Okay, before we get stuck in, I'm also going to give you some very common acronyms. This strategy is very acronym heavy. I think property in general is very acronym heavy, and I want to make sure everyone is understanding what we are going to talk about. First one, a CBS, Community Benefit Society. CBS typically will mean it's a registered charity. Next up, CQC. This is Care Quality Commission. This is kind of like the Ofsted of the care world. DWP. This is the Department of Working Pensions. You may have heard this before, but this one's used a lot because it's often them that are paying to help support this care. CPI stands for Consumer Price Index, and basically what that means is inflation, and that will be explained a lot more later in the video. FRI lease. This is fully repaired and insured, and again, this is something we are going to cover later in the video as well. Why is this such an important strategy? Right now, there has never been more demand in the UK, especially on the back of COVID.
China has identified the cause of the mysterious new virus.
We have a population who needs a lot more support, and a lot more support than we currently have homes available. And if these people aren't in the right homes with the right support, they are having to be in hospital. And there's literally case after case, example after example, news article after news article that I can show to demonstrate how bad the current situation is. And unfortunately, it's only getting worse, which is why this strategy is so important, because we can actually, as landlords, benefit, but also make a huge impact as well. A question we actually get asked a lot is this a new strategy? Because for a lot of people, this is their first time hearing about it. The short answer to that is no. This strategy has been around for a long time. However, it's typically only been available to the high net worth investors, the funds, the family offices. And the reason this has taken a massive shift in the last 2 years is that the demand is so big that these big funds, they can't support this now on their own. So they are having to make it accessible to everyday investors to make sure that we are starting to match the demand. And this is a massive hint, because if the successful people are doing it, if that's where the huge funds are putting their money, it gives us a good hint and insight that actually this is an incredible investment strategy for us too. My whole philosophy through life is, if there's someone more successful than yourself and it's someone in a position that you would like to get to, follow their path for success. There is a lot of protection around this strategy, which is one of the reasons it is so popular, because as investors, the lower the risk, the better for us. Typically, with high reward, it's higher risk. However, this strategy is very, very risk averse, in a few ways that is done. A lot of times the leases are almost government backed because the funding comes from the DWP. Without getting too technical, this is all wrapped up in Section 117. Section 117 is an act that the government have to abide to. This act ring fences vulnerable people to ensure no matter what happens, the government have an obligation to protect these people. And a brilliant example of when this happened was when Birmingham Council went bust.
Birmingham is officially broke. The City Council, the largest local authority in Europe, is effectively bankrupt.
And when they came out to deliver the news, the two things they said they were going to continue to pay regardless was the refuse and also vulnerable people. Because Section 117's there, they can never cut funding from that section, which helps the landlords and the tenants feel a lot more secure. This is very much a government-led initiative. So the natural question people want to know is, well, what happens if the government change? Very, very good question. The only alternative now is that Labour get in, okay? And if they were to get in, that sector is only going to increase. How does it work? As I said, these tenants need to stay in their properties for a long time. So therefore, the care providers often offer landlords a long-term lease. Now, this can be anything from 5 to 25 years so that the tenant can stay in there for as long as possible. These leases are typically CPI tracked, which means your rent is reviewed annually and will go up in line with inflation. Not only that, but it's also floored, meaning even if CPI was to go down, your rent wouldn't move. There's different types of leases, but that FRI lease we mentioned earlier means fully repaired and insured. That means any maintenance, any management, any damage of any type to the property, if the carpets need replacing, if the roof needs doing, anything that needs to be done will actually not only be done for you, but also paid for you. So that monthly rent that you receive is net profit because you won't be expected to pay anything else throughout the term of the lease. It sounds good, right? So let's talk about the benefits for investors. First up, higher returns. Typically, you can see 2 to 3 times the returns on a regular AST. Now, the reason that is because currently these people are in hospital beds. Hospital beds with all the support and care costs thousands and thousands of pounds per week. So the government can actually afford to pay landlords a little bit more than regular AST and still save a shed ton of money, so everyone is then a winner. Because you've got a long-term lease, you are assuring the rent every single month for a long period of time. You're not going to have any tenants move out, you're not going to have any down periods. So gone of the days of trying to find new tenants, having void periods. That just does not exist because you have a long-term lease locked in, meaning you don't have to worry about tenant turnover and there's going to be no loss of profits there either. Hands-off investing. When everyone talks about property, they're like, oh, passive property. Like, that word passive is thrown around all the time. That tends to be a load of rubbish, and especially if you're in the serviced accommodation space, if you have any HMOs, you will definitely attest to the fact it can be far from passive. This strategy is genuinely the most passive property investment strategy you will ever see. As I said, those FRI leases, management, maintenance, insurance, everything is included. The only thing you get told about is the rental payment landing in your bank account every single month. And I've had so many people convert to this strategy, and once they buy one, they're ready to buy the next because they've just never seen anything like it. A higher exit value. Because you have a commercial lease in place, you can actually exit on a commercial value, which is all to do with the yields and the percentages. So for my developers in the room, this means that you can exit a project on the commercial value of the lease. This is insane to increase profitability and help you exit at a higher figure. I've had so many people where the property just does not make sense, the HMO numbers aren't stacking up, or a development just cannot be done because the numbers are too tight. As soon as you plug this strategy in, suddenly this whole world opens up and you're making really, really healthy profits. And finally, and one of the most important, is the better impact. You know you are investing into a strategy that is having a genuinely life-changing outcome for the individuals that are in the property. One of the reasons I really love it is because everyone in the situation wins. To save the government money, the tenant's actually much happier, because imagine living in a hospital and instead having a purpose-built home where they can have their own stuff, their own belongings. Finally, the investor benefits in terms of profit, in terms of time management, in terms of everything. When I explain this strategy, the response I get most is, what is the catch? Like, this sounds too good to be true. And I agree. I said exactly the same thing the first time someone walked me through this process. And if I'm being honest, I would say one of the catches potentially are that it is more difficult to set up, because you're not just worrying about a property and a regular tenant, but you've got a property. You need to make sure that it's right for the tenant's needs, and sometimes the properties need adaptations. So mental health tenants, for example, that is very, very light touch, but someone who would need wheelchair access obviously needs accessibility to the properties. So that's one key difference between a regular buy-to-let to this strategy, for example. So it could be seen as a harder setup because there are a few more pieces of the puzzle that you need to connect in order to unlock the passive strategy. But once you have done that upfront hard work, you've then genuinely got 15, 20 years of absolutely nothing. So in the great scheme of things, yes, it's a little bit harder, but it's well worth it. And also, if you are looking for a little bit more information on how to set this up yourself, make sure to head to the link below in this description and sign up for the waitlist for our free training, and we'll make sure to drop you an email with all the good stuff that you need to help you on your journey. I'm a very visual person, so I kind of just wanted to bring this to life a little bit with a live example. So this particular property is one that myself and my business partner are buying together. In terms of the numbers on this one, it was purchased for $495. The work on it has equated to $294,000. Now, we have already had sign-off approval for rental income of just over $70,000 annually per year. And you can see in this report that we've had the valuation based on a 6.5% yield come in at 1.2 million. So this is what I mean about the exit values. They come in really, really strong because we can base it on the commercial lease aspect. Now, that is kind of irrelevant because I want to keep hold of this for purely the passive income that's going to come in associated with it. I'm definitely going to hang on to this, but if you were looking to put this in place and sell on, you can create some really great wins and flips with this strategy as well. I'll actually show you a before and after of the property because they are polar opposites. I mean, like most projects, this went slightly longer than anticipated. We thought it was going to take 6 months. It actually took 9. However, in the greater scheme of things, those 3 months won't worry us too much because we have a 25-year contract on this property. I'll actually be 50 by the time that contract is up, which is absolutely wild, but very, very successful. We had the right team around us, and that was the most important part to make this a success, and we were very, very pleased with the outcome. So who is this strategy perfect for? I would say it is perfect for investors that want complete hands-off approach. Investors that may be tired of HMOs, tired of buy-to-lets, tired of serviced accommodation, tired with all the stress that comes with that, and want something that's truly passive. I have a lot of people who are retired and looking for that additional income. I also have a lot of busy working professionals who were just like, listen, my job is stressful enough. I don't want my money to have to worry about that anymore. I need investment strategy to be completely passive. Again, this has been absolutely perfect for them. And we help them implement that strategy, and they've been very, very, very happy. It's also perfect for those people who are looking for flips, who are developers looking for a higher exit price on their properties, because like I said previously, costs are going up. Everything is making the job of a developer very, very difficult. This strategy helps you unlock those higher prices based on the valuation, and it just allows that additional profit to make it all very worthwhile. There's demand literally everywhere in the country, so it doesn't matter where you are, what budgets you are. You can do like one unit at a time, or you can do bigger developments of self-contained units. This can be really, really versatile and is really open to anyone. If you've listened to all that and you're like, this sounds good, the next question is, how do we get involved? And there are multiple different ways that you can actually get involved in this strategy. You can simply be an investor and buy a ready-made product and buy into this strategy that's cash producing from day one, and it'll all be ready to go. So you can invest in this as an investor. Equally, you can implement this strategy yourself and either keep hold of it or exit it if that's what you want to do. Finally, you could then even look at sourcing in this space as well. And this is where I started, and either brokering a deal where you're helping them get the lease in place, or you're simply helping them with an exit and you're helping with the investment side of things. So there's so many different ways that you can get started in this space, and the greatest thing is that you can get started without any money at all. So again, very low barrier to entry, because you can genuinely get started at any point that you are on your journey. I think my biggest piece of advice if you are starting out in this journey is making sure you are surrounded by the right people, making sure you have all the information that you needed, because it is a new strategy. You want to make sure you are setting it up right to ensure that you have the gold standard of asset at the end of it. So if you do want any more details or any more further support on this strategy, head to the link below in this description. We have free guides, free training. Jump on that list. We will send you everything that you need to get started, and any questions that you have, ask away, because I'm more than happy to dive into each one of those strategies in a little bit more detail on another video. Really, really hope you enjoyed. Do let me know how you are getting on in your supported living space. Have you seen it before? Any questions that you have, leave it below and I'll do some follow-up videos. Hope you enjoy. Catch you soon.